Most disasters come from ignoring the obvious. When gold prices outpace stocks, it means one thing. People are scared, not excited, not optimistic, scared. And when people are scared about money, the system is usually breaking. I have watched this pattern for 70 years. It is not complicated. It is arithmetic. When gold rises faster than productive assets, it means the currency is dying, not the economy, the currency. Most people cannot see the difference. That is why they get destroyed. In the last century, this has happened exactly 5 times. The Great Depression of the early 1930s, the stagflation crisis of the early 1970s, the dot-com bubble burst around 2000, the great financial crisis of 2008, and the pandemic shock of 2020. This is not history. This is the resume of failure. Each time the pattern was identical. Gold surged, stocks stalled, the system cracked. Some people became incredibly wealthy. Most people became poorer. The question is not whether this will happen again. The question is whether you will be on the right side of the equation. History does not repeat, but human nature does. And human nature is expensive. When governments run out of options, they always choose the same path. They debase the currency. They print money. They steal from savers to bail out debtors. This is not a conspiracy. This is arithmetic. When a government spends more than it collects, it must take the difference from you. It does this through inflation. It does this by making your dollars worth less. That is why gold rises. Not because gold is becoming more valuable, because dollars are becoming less valuable. Most people never see this. They think gold is an investment. It is not. Gold is insurance. Insurance against currency debasement. Insurance against government stupidity. When that insurance costs more than productive assets, it means the currency is sick, the system is sick, and you need to protect yourself. The pattern is always the same. Government spends beyond its means. It borrows. It prints. Inflation rises. Gold surges. The system cracks. Some people get rich. Most people get poor. This is not prediction. This is history. I have seen it 5 times in my lifetime. Each time the mechanics were identical. The names changed. The dates changed. The stupidity did not. In 1933, the government made it illegal to own gold. They seized it at $20 an ounce. They revalued it at $35 an ounce. They became wealthier by changing the numbers. That is not strategy. That is theft, but it worked. The government survived. The people paid the price. In 1971, they took the dollar off the gold standard. They could print infinite money. They did. Inflation exploded. Gold surged. The system cracked. Some people got rich. Most people got poor. The pattern never changes. Only the dates change. Now we are seeing it again. The government is spending trillions more than it collects. The deficit has more than doubled in just a few years. The debt is growing faster than wealth. The fastest growing expense is interest payment. The system cannot sustain this, so they will print more. They will debase more. They will steal more. That is not a prediction. That is arithmetic. When you cannot pay your bills, you have 2 options. Stop spending or print money. Governments always choose the second option. Always. I have never seen an exception. They will tell you it is temporary. It never is. They will tell you it will not cause inflation. It always does. They will tell you this time is different. It never is. The Federal Reserve is considering revaluing gold from $42 an ounce to $3,300 an ounce. They want to change the numbers, make the government look wealthier. That is not creating wealth. That is marked to fantasy accounting. If a CEO did this, he would go to jail. When the Fed does it, they call it policy. It is the same trick they used in 1933. The gold. Revalue it. Identified. What? Look wealthier. But the real wealth did not change. Only the numbers changed. That is how governments solve problems, not by fixing them, by hiding them. The Trump administration is doing the same with Bitcoin. They want to keep seized Bitcoin on the balance sheet. Pad the balance sheet with volatile digital tokens. If Bitcoin rises, the government looks wealthier. If Bitcoin falls, the government looks poorer. That is not strategy. Alden said. Is not strategy. That is gambling with other people's money. That is financial engineering, cooking the book. But it makes the numbers look better, and that is all that matters to politicians. The real question is not what the government will do. The real question is what you will do. Most people will do nothing. They will hold cash. They will watch it melt. They will wonder why they cannot get ahead. The answer is simple. They are on the wrong side of the equation. When money is being debased, you must own assets, not cash. Assets, stocks, real estate, businesses, token, things that can raise prices when currency falls. That is the only protection. Productive assets with pricing power. That is what compounds. That is what protects. That is what builds wealth. The math is brutal. Over the last 5 years, wages rose 22%. The stock market rose 90%. That is not a coincidence. That is by design. The system is rigged for the asset owner, not the wage earner. When money is printed, it flows to assets, not wages. Assets. The investor wins. The worker loses. That is the system. That is the architecture. That is why you must become an investor. Not because you want to get rich, because you want to survive. The system is designed to destroy savers, to reward owners. If you save cash, you lose. If you own assets, you win. The government will continue to spend. They will continue to print. They will continue to debase. That is not going to stop. You cannot change that. You can only change what you own. Own productive assets. Own businesses with pricing power like See's Candies or Costco. Own real estate with rent escalation. Own things that float when currency sinks. Gold preserves value. Businesses compound value. That is the arithmetic. Do not own cash. Do not own bonds. Do not own things that lose value when money is printed. That is not investment advice. That is arithmetic. When the system debases, currency assets rise, cash falls. That is the math. Simple. These brutal, unavoidable. The system rewards owners. It punishes savers. If you want to win, you must become an owner. See, you must become an owner, not a saver. An owner. That is the inversion. Instead of asking how to save more, ask how to own more. Instead of asking how to protect cash, ask what assets protect you. Instead of asking how to avoid risk, ask what risk you cannot avoid. The risk of holding cash when currency is being debased, that risk is unavoidable. That risk is fatal. The risk of owning productive assets when currency is being debased, that risk is manageable. That risk is necessary. The question is not whether you will take risk. The question is which risk you will take. The risk of owning assets or the risk of owning cash. One comes, one melts. The choice is yours, but the math is clear. When gold outpaces stocks, the system is cracking. When the system cracks, some people get rich. Most people get poor. The difference is not intelligent. It is what you own. What you are. Daddy, Benvira mile meter day. It, but fee. Own productive assets. Own things that compound. Own things that float when currency sinks. Do not own cash. Do not own things that melt. Productive assets compound. That is the rule. You do not need brilliance. You need fewer unforced errors. You do not need to predict the future. You need to own the right assets. You do not need to time the market. You need to own productive businesses. That is how you survive when the system cracks. That is how you thrive when others are destroyed. The window before 2026 is closing. The system is moving. You can move with it or watch it move past you. That is the rule. Simple. Brutal.